Your identity has remained secret since Bitcoin's creation in 2008. Why did you choose to give an interview now? I'm here because of the recent political and economic instability around the world. I don't want to focus on myself. The political unrest, global health issues, and rampant inflation are compelling reasons to discuss Bitcoin. Some say that cryptocurrency doesn't have a good reputation among the general public. That's true. But fortunately, we're seeing growing interest in crypto as more publications and social media platforms reveal the true benefits of Bitcoin. Many early articles claiming Bitcoin is only used for shady business are simply not accurate. Wasn't Bitcoin used to purchase illegal substances on a notorious darknet site that I won't name? Yes, it was, alongside other currencies like USD. The biggest misconception was that Bitcoin transactions are completely anonymous. Aren't they? To some extent. All blockchain transactions are recorded in a publicly accessible ledger that tracks all Bitcoin transactions. The only anonymous aspect is the account owner, who operates under a pseudonym. However, identifying the account owner is possible by analyzing transaction history and other available data. What is the main difference between a USD and BTC transaction? The key idea behind BTC is direct payments within a peer-to-peer system, similar to a cash transaction without needing physical presence. Such transactions occur without third parties or intermediaries like banks, so they can't be slowed down, canceled, or limited by any financial institution. If BTC's primary goal was to digitalize cash payments, why do some people consider it worth buying and holding? To understand this, one needs a basic knowledge of economics, particularly the role and function of money. Sound money must have three characteristics. It should be easily divisible, easy to transport, and hold its value over time. No asset will maintain its value if it can be easily produced in large quantities and entered into the market. Are you referring to excessive money printing and current inflation? It's more about the bigger picture. Consider European merchants in the 16th century who noticed beads were used as money in Western Africa and started importing them in large quantities from Europe. A currency won't collapse if its stock-to-flow ratio is slow and stable. Huge, sudden increases cause erosion in purchasing power and impoverish holders of the asset. Are you talking about something similar to a market bubble? Exactly. Take copper, for instance. If a millionaire invests $10 million in copper, which is 10% of the global annual production, the value of copper will rise. More people will start investing, driving the price up, which will increase production since it becomes more lucrative for mining companies. Since copper is practically unlimited, its mining depends on time and money. When increased mining meets investors' appetites, the bubble grows. The problem starts when investors want to capitalize on their investments, causing a reverse trend and significant losses. How can we protect ourselves from these trap investments? To invest wisely, we must understand the monetary traps associated with assets and goods whose production can be easily increased and brought to market. What about gold? Precisely. The world's gold stock is so large that its annual growth hasn't exceeded 2% in decades. It's impossible to mine enough gold to cause its price to drop. Gold can't be artificially created, and mining is expensive, time-consuming, and toxic. Central banks keep gold reserves because of this. However, governments often manipulate the supply of fiat currencies based on the economic situation, leading to inflation. This devalues currencies and erodes savings. Is all paper money doomed then? The 20th century economic model relies on consumption rather than saving. Interest rate manipulation allows banks to loan more money for day-to-day spending rather than investments. Instead of growing our savings through sound investments, we pay more interest on growing debt and higher taxes, making it hard to save for retirement. Loans are now necessary for major expenses, unlike 100 years ago, when people paid for homes and education with savings. Today, even the wealthy prefer loans to maintain certain standards. Politicians manipulate money for re-elections, killing the incentive to save and encouraging borrowing and spending. This reduces family formation, increases marital breakdowns, and lowers birth rates, impacting physical and mental health. Is all of this caused by paper money? Notice that most modern technology was invented in the 19th century when gold was the global monetary standard. Stable value encouraged saving and investing in families. This era produced great artists like Bach, Mozart, and Michelangelo, who perfected their craft over years. Today's artists don't work as hard. Modern art galleries often display works requiring minimal talent. Governments decide success, not public opinion, resembling Soviet-backed communist art for propaganda. The future looks grim. Is BTC a solution to some of these issues? BTC is controlled by people, not any single entity, and will become what people want it to be. How would you explain the technology behind BTC in simple terms? The key is verification. Many doubt decentralized cryptocurrencies, but each BTC transaction is recorded in an online ledger and verified by all networked computers, nodes. Nodes also perform complex calculations, and their work is rewarded in Bitcoin. More nodes mean more security, as verification is handled by more units. So BTC was most at risk of hacking when the network was small. Is that correct? Yes. Now, hacking BTC is impossible. It's more lucrative to invest in miners and join the network. Digital peer-to-peer transactions avoid intermediaries, eliminating delays or governmental inspections. However, BTC transactions are slower than those of centralized processors like Visa. BTC handles about 4 transactions per second, while Visa can process 3,200. Visa's centralized infrastructure allows for speed and volume, while BTC's decentralized system slows the process.